Good morning. This is Linda Svihovec from the North Dakota Association of Counties. I am their research analyst. My background is 30 years in McKenzie County as their treasurer, their auditor, and then a combined auditor treasurer before retiring from there in 2017 and moving to Bismarck for the opportunity to work for the North Dakota Association of Counties. Today, I'm going to talk to you about budgets and mill levies for North Dakota townships. The timing is great on this as we're presenting this and recording it in March. And this is the month that townships hold their annual meeting where their budgets for the next calendar year are approved and their mill levies are set. We're going to talk today about mill levies and budgets, but we're also going to talk about the powers that township electors have, their supervisors, and the responsibilities of the clerk and treasurer. So the North Dakota Century Code gives a lot of power to township electors. There are, I believe, 20 different powers authorized by the North Dakota legislature for township electors. I highlighted 3 of them here as they are probably the 3 most frequently used and well-known and most important to know. And those are that township electors are empowered with authorizing the levy of township taxes for the repair and construction of the roads in your township. They are also have the power to support an airport or create an airport authority within your township and levy a tax to support that. You also have the power to establish special assessment districts in your township to pay for special assessment improvements. Some of the other powers given to township electors are to authorize supervisors to purchase chemicals, authorize them to aid to a district fair, provide aid to a district fair association, to direct expenditures of funds raised for construction of roads within the guidance or limits provided in Title 24 of the Century Code, allow for township funds for weather modification, and funds to pay fees in counties for state and national associations, to allow your board of supervisors to transfer township funds to a rural fire protection, and the rural ambulance district for that matter. Again, like I said, in the North Dakota Century Code under Title 58, 0601, it allows 5803, it gives all of the powers to lists all the powers for township electors. Next, we'll talk about the Board of Supervisors' responsibilities for budgets and levies. Century Code, again, Title 58, 0601, talks about the duties of Board of Township Supervisors. And coming up here this month, like I said, is the annual meeting of every township, organized township. It's supposed to be the 3rd Tuesday in March. For that this year, that would be March 15th, 2022. What the Board of Supervisors is responsible for at this annual meeting is to levy the annual taxes for the upcoming calendar year as approved and voted on at your annual meeting, and to submit a budget for the township at their annual meeting. The main reason we're doing this presentation is to talk about mill levies, mills, valuation and property tax, and hopefully provide some education to those listening and answer some questions you've maybe had for a long time. This is a topic that is confusing for a lot of people. Unless you work with it on a daily basis, it can be something that is hard to understand. So hopefully today we'll, when we get through these slides, you'll have a better understanding of what a mill levy is, how it's calculated, what that has to do with the valuations in your township. So we'll talk about what is a mill and a mill levy, what's the difference between the true and full market assessed and taxable value. You hear those terms kind of used interchangeably. We'll define each of those and talk about how they are each calculated differently. We'll talk about how the taxable value is calculated for a political subdivision, including townships. We'll talk about how mill levies are calculated. We'll talk about how mill levies are used to calculate then ultimately the property tax on the statement that goes out to your taxpayers. And we'll talk about finally how property values affect mill levies. This is a definition that many of you are familiar with, but hopefully we'll have a little bit more in-depth explanation for you. So a mill, if you Google it and say, what is a mill regarding property and related to property taxes, it'll tell you it's defined as 1/1000th of $1. It is the tax rate that is applied to the taxable value of a property. The amount of tax to be levied and collected on any property or within a political subdivision is calculated by dividing the dollars needed to fund the budget by the taxable value of the political subdivision. And later in the presentation, we're going to get into more detail about the budget process itself. So the tax dollars needed for a budget divided by the taxable value of that political subdivision equals your mill levy. So that's the rate, the 18 mills that most townships levy. That's how that's derived at. The mill levy, or those 18 mills times an individual's property tax value, is what they will be billed for on their property tax statement for your township. We can't understand how mill levies are calculated until we understand property values and how those are determined. In North Dakota, all properties are valued in one of three ways. One is either that they are locally assessed, and most of you will know that you have a local assessor. Many townships contract with the county tax director, and several also have their own assessor. But those properties, those assessors assess locally, and that's all the real property that is subject to property tax. The values are set as of February 1st of each year, and they're valued at the true and full value when you're calculating. That'll be used to calculate property taxes. So it's all residential, commercial, and agricultural land. The second way in North Dakota property taxes are valued is they are centrally assessed, and that means they're assessed by the State Board of Equalization. Examples of that are railroads, pipelines, airlines, and investor-owned public utilities. The state tax department then, once those values are determined, certifies the approved value to the county auditors. And the third way values our property in North Dakota is rural electric cooperatives and telecommunication companies. They're valued a little bit differently also. So the electric generation, distribution, and transmission taxes are assessed differently than all other real property. The guidelines are set by the North Dakota Century Code 57-33.2, and they are administered by the North Dakota Tax Department. And then those taxes are distributed by the state treasurer to counties to further disseminate to the political subdivisions. Property value definitions. Again, we hear true and full versus market. We hear assessed, we hear taxable. What are the differences and how are they calculated? So true and full value for residential and commercial properties are typically based on a market value, where true and full value for agricultural land is calculated using a production-based formula that NDSU provides. So the difference in true and full value, it's the amount determined by your local assessor to be the correct value to be used for property tax calculations. And local assessor, like I said, can be that somebody in your township, or it can be your county tax director or somebody that works in the county tax director's office. The market value is the price of property would bring if it were offered for sale in the open market. And there's where I say true and full value is somewhat determined and based on the market value, because as those, and especially when it comes to residential and commercial properties, as sales happen, those sales are compared, are used in comparison to make sure that as they're assessing properties in the county, they are staying within a threshold and adjusting to the market that where prices are selling. An example would be in McKenzie County during the heart of the oil boom, property values there doubled and tripled in some cases, residential and commercial properties, just because the housing was so critically needed and so short, and so people were paying astronomical amounts for very average homes. And then we'll talk a little bit about what effect those kind of increases in valuations have on your property tax bill, and hopefully clarify and clear up some misunderstandings about how valuations should and can affect your property tax bill. Okay, moving on then, the second type of valuation definition is called the assessed value. The assessed value is very simply 50% or 1/2 of the true and full value. So if your local assessor has determined that your home is valued at $100,000, the true and full value is $100,000. The assessed value, and this is used in bonding calculations, and it's used in deriving at the taxable value amount as well. But the assessed value then of that $100,000 home would be $50,000. Third value is taxable value. The taxable value on residential property is 4.5% of the true and full value, or 9% of the assessed value. The calculation comes out the same. For commercial, agricultural, and essentially assessed property, the taxable value is 5% of the true and full value, or calculation, if you want to use the true and full value, it'd be 10% of the assessed value. Property classification types, there are 3 under North Dakota law, and only 3. So residential, commercial, and agricultural. So every property in North Dakota falls under one of these, every locally assessed property value falls under one of these: residential, commercial, or agriculture. And again, to reiterate, residential value when determining the taxable value is 4.5% of the true and full value to get to the taxable value. For commercial, it's 5% of the true and full value. And for agricultural property, it's also 5% of the true and full value to determine the taxable value. And the taxable value is what we use in all of the calculations going forward for budget purposes and for mill levy determination. So how is the taxable value calculated for a political subdivision? Again, talking about on the first column there under property class, we have residential, commercial, agricultural, which are assessed locally, and then the centrally assessed property, which is assessed by the state. We have those different classification types. There is a true and full value determined for every one of those properties. And in this example, we're showing that the true and full value of, how did that happen? There we go. The true and full value of the residential property in this county is $45 million. Half of that, if you move over one column for the assessed value, 50% of that is $22,500,000. And since it's a residential property, it's going to be 4.5% of the taxable, or 9% of the assessed value to determine the taxable value of the residential property in that county. That calculation comes out to $2,025,000. The other 3 types of property, commercial, agricultural, and centrally assessed, are determined the same way, other than in the final column to determine the taxable value of the commercial, agriculture, and centrally assessed property. We use a 5% calculation on the true and full value, or 10% of the assessed value. In this county, for the example that's on the slide here, is leaves a total true and full value in this county of $434 $217,500,000. Half of that for the total assessed value in this county is $217,250,000. And when you add the different taxable values for residential, commercial, agricultural, and centrally assessed, the total taxable value in this county would be $21,500,000. So each property in your township is given a value, other than those that are exempt, which include farm homes and farm outbuildings, farm property in general, for those that qualify for the farm home exemption. Other than that, each property, all the land, and all of the commercial buildings, all of the taxable residential properties are all, and any centrally assessed property, regardless of where it's located, any pipelines or oil well structures, all of those kinds of things are valued. And the total of all those values together are combined to make that total true and full value. And then the calculations, everyone's got software now at the county level that does this, but these calculations are performed on each one of those values. So we'll talk a little bit about budgets and mill levies next. Some of the basics are that levies are certified by the elected governing bodies. So they're certified by the township. There's also an estimated tax notice that goes out on August 31st. And there's an opportunity after that estimated tax notice goes out for all political subdivisions to hold a public meeting, townships the same, and review their proposed levies for the next year before finalizing it with the county auditor, which is October 10th is the deadline. Important to note that taxes levied by the township, those that, and you'll be approving these and certifying these this month, and they are to be certified to the county auditor immediately following your annual meeting or within 10 days thereafter. So just be aware of that, if you're meeting here on the 15th, your certification of levies is due to your county auditor by the 25th. So taxing authorities, all taxing authorities in North Dakota, county, township, schools, cities, parks, etc., approve budgets at an annual budgets annually for services that your residents have either want or they've asked for. Buyers and sellers in the market create the value. Assessors study the market transactions and establish a property value. And then those approved budgets are divided by the total taxable value, and tax rates or mill levies are set. We've got some slides coming up that will demonstrate that. On the township budget form, we're going to go into a little bit more detail on that here before we talk more about levies. The township budget form is separated into 3 sections. Schedule A is the certificate of levy. Schedule B is the appropriation, cash reserve, and levy calculation. And Schedule C is the annual budget for each fund. Schedules A and B are on the first page. Schedule C, or as many Schedule Cs as you need, follow that first page. And ironically, in the budget process, even though it's page 2 and then and on for your township budget, annual budget, we're going to start with Schedule C in the budget process. It's the first step toward determining and working toward what you're going to need for a levy. You're going to prepare a Schedule C for each fund. And again, the annual budgets are used to estimate the revenues and expenditures for the year. When you are preparing these budgets, if you notice under column 3, the estimated 2023, first line where it says general fund property taxes, you do not include property tax estimates on your revenue and budget because this is calculated later and it's based on the amount you need to fund the budget. So starting at the top of Schedule C, it asks you for the amount, this is for the amount of revenues. It says enter the actual revenues collected the prior year in the first column. So if you notice in column 1, this is an example of a 2022 budget. So that's the most recent year that's been completed. And on a 2022 budget, the first column is going to show the actual receipts for 2020. They would have a year ago estimated the receipts for 2021. And then they would have estimated the receipts also for 2022. Now this year, conversely, you're going to be on your budget form right now, you're going to be showing the actual receipts for 2021 in column 1, the estimated receipts for this current year, 2022, in column 2, and you're going to be estimating your receipts for 2023 in the final column. And again, you're going to leave the property tax income blank for next year for the 2023 budget, because we'll show you later how we calculate that. And as you notice here, we are in this example, this is an actual Ness Township, I believe in Pierce County. This is their 2022 budget. Their actual receipts, including property taxes that they collected in 2020, was $24,779. In 2021, with property taxes, it was $25,875. And the estimate they showed for 2022, not including property taxes, was $7,899. So in other words, all the other funding that comes in to that township, with the exception of property taxes, amounted to $7,899. Continuing on the sample 2022 budget for the same township, at the bottom of Schedule C, you're going to budget and compare your disbursements or your expenses. And again, the same 3 columns, you're going to show the actual in this 2022 budget to be the actual 2020, the estimated 2021, and the final 2022. And of course, this year in March, this month, you're going to approve again, the same as the revenues. Your budget form should say in column 1 should say actual 2021, estimated 2022, and final 2023. Again, this budget for this particular township recorded $25,000. If you can see right above the blue line, they recorded $25,612 in total expenditures in 2020, $25,382 of total expenditures in 2021. And they're estimating for 2022, $25,382. And if you're a new budget preparer and this form seems overwhelming, you could see the benefit of gathering those previous 2 years of data, so you have an idea of what to estimate you will need for the upcoming budget year. And that's what example they did on this budget. They're showing for blading and graveling. They know they actually did spend $23,935 in 2020. They estimated for 2021, $25,000, and they're estimating for 2022, $25,000. At your annual meeting, there may be some discussions that cause those numbers to vary, but it's very helpful and needed on this budget form to at least have those numbers that you approved that actually happened and what you approved last year. Another suggestion that I have is, along with your estimate for the previous year, so in this case, the estimate for 2021, it sometimes is helpful to insert, if you have this on an Excel spreadsheet, insert an extra column that shows where you're actually at year to date as of March. However, unfortunately, with township budgeting deadlines, most of your money, other than snow removal, is spent during the summer months on blading and graveling. But you can, this is minimally what you are required to have in your budget statement or in your budget form. You could certainly add more if that's helpful to your township supervisors, if it's helpful for them to make decisions. The numbers below the blue line are also where you calculate what the difference between the receipts over disbursements, what your balance was on January 1st, and what the balance is on December 31st, which is how you come up with the estimate in the middle column of what you expect to have for an ending fund balance at the end of this current year. Again, the columns for this 2023 budget year will be actual for 2021, estimate for 22, and final for 2023. We recommend with expenditures that they are realistic and based on adequate revenues. So you've done that revenue portion, the top portion of Schedule C. You kind of have an idea of what your revenue is going to be and what the potential for your revenues are. And so your disbursements part of your Schedule C needs to be realistic, but you also have to account for changes in service and contracts pricing. Certainly this year, we need to account for increased fuel prices. Who knows for sure where that's going. And then, so that's where you need to take into account recent trends and economic projections when you prepare your budget. Schedule B is on the bottom of page 1 of the township budget form, and this is probably the most confusing form. And I probably am not helping with this slide, but I'm going to walk through it and know that my phone number is at the end of this presentation. You are welcome to call me if you need further clarification. Essentially what this Schedule B does is creates the calculation for you to determine how many dollars you need in taxes for the next year to fund your budget. And I think most townships, I'm sure most townships across the state levy the full 18 mills, because in most townships that doesn't typically bring in enough to do major work without some other assistance or grants from the state or help from the county, but you do need to justify or explain these numbers on Schedule B. Need to calculate out to showing that you need that 18 mills. So let's start with the first line, the final appropriation in column under the general fund column, line 1, final appropriation. You're going to pull from what you approved on your budget form from the disbursements. I'm going to go back here to this slide. And what you approved for 2023 was $25,000, or this township, $25,382. You're going to pull that forward, and that goes on line 1 of the Schedule B. And we're going to hop down to line 4. Line 4 is the cash and investments available on December 31st, 2020. Well, this year to be 2022. This, of course, is an estimate, again, pulled from the bottom of your Schedule C. You can see circled in blue here, where you've calculated what you knew your end of the year balance was from the prior year, what you estimate your revenues and expenditures are going to be, what you estimate your year-end balance will be. That's pulled forward to line 4. Line 5, you're pulling from the top part of Schedule C. I'm going to go back 2 slides and show here where you estimated that you're going to have $7,899 of revenue, not including property taxes, to fund your 2023 budget. So you've got $12,000 as reserve that you're carrying forward on line 4, and you're estimating you're going to have $7,899 in additional revenue that'll come in 2023. Line 6, you're going to add those 2 numbers together. Well, now I'm going to confuse you a little bit more probably, and we're going to back up to the top part, and we're going to look at your cash reserve on line 2. Line 2 is an estimate of what you would like to, or your township supervisors think you need to carry forward or to keep in reserve in case of an emergency so you have that left at the end of the year. And in this case, Ness Township estimated $12,000 or requested $12,000 in cash reserve. And so when that is added to the final appropriation of $25,386 or $382, along with the $12,000 reserve, the total appropriation in cash reserve on line 3 is $37,382. So here's where we calculate the levy. That total that you need to fund the budget, which is all of the approved expenditures plus a $12,000 cash reserve, is $37,382. That comes from line 3. You are estimating from line 6 that between your end of the year balance and the revenue you're going to bring in, that is not property taxes, between the $12,034 end of year balance and the $7,899 of non-property tax revenue, you're going to have $19,932 to work with. So in the black circle, you've got a total appropriation of 30 and cash reserve of $37,382. You know you've got $19,932 of revenue that you're anticipating, revenue and end of year balance to work with. It means you are short $17,449. And that is the calculation on line 7. You've subtracted the $19,932 from the of revenue and end of year balance from the total appropriation and cash reserve, and you have $17,449. On line 8, you're allowed a 5% calculation for delinquent taxes that you can levy for as well. In this case, that calculates out to $872. And line 9, the total amount levied then is the total of line 7 and 8. And the total amount you're going to certify to levy is $18,321. You will need $18,321 of property taxes to fund your budget for 2023. And that means to pay your bills of $25,382 that you're estimating and have $12,000 left at the end of the year. Schedule A at the top of your township budget is simply the page where you certify the levy, or the section where you certify the levy. And so, you know, and I, over my years as county auditor, I saw lots of townships that came in and said, same as last year, or 18 mills, and they didn't do the calculations. They would send this form in and just say 18 mills. The budget form requires you to certify the amount of taxes in dollars, not in bills, not in mills. So as we said in the previous slide, this particular township needs $18,321 of taxes to fund their next year's budget. And so they've certified that in dollars and signed off on it. You're going to file the certificate of levy with Schedule B and C for all funds. You're going to create a separate Schedule C for each fund that you have. And you're going to file it with the county auditor within 10 days after the board takes action. You will notify the county auditor of any changes to your levy authority approved by your voters. Had a phone call from a township yesterday that is considering adding on the some mills for under the emergency levy that's allowed for townships. And again, that would be a new levy for that township. And they are, you know, it's a good idea to notify your county auditor if you've added in any additional voter approved levies. Mill levy calculation. And here's the portion of the presentation that deals with how we calculate actually that mill levy or that mill rate, and where does that come from? If you remember, again, I'm just going to back up one slide or a couple slides. We said we needed $37,000 on line 3, $37,382 to fund this budget. hopping forward to the mill levy calculation. So on the top line of this example, and Ness Township needs $37,382 to fund their 2023 budget. They know they have $19,932 of non-property tax revenue between revenue and their end of year balance to work with, which leaves $17,449 of unfunded expenditures. Adding additionally to that, a 5% allowance for delinquent taxes, they will need to levy $18,321 to fully fund their 2023 budget and allow for a $12,000 cash reserve or end of year balance. Calculation of the mills for that. So the property taxes needed for this general fund budget again are $18,321. If the taxable valuation of this township is $1,02,295, the calculation to get to the actual mills is $18,321, or that the dollar amount needed for the property taxes divided by your taxable valuation. So again, refresher on the taxable valuation, that is a total of all of the true and full value of all property in your county, with the percentages, 4.5% applied to residential, 5% to commercial and agricultural and centrally assessed. Those all added together then give this township a taxable value, total taxable value of $1,02,295. That calculation to divide the amount they need in property taxes to fund the budget by the taxable valuation comes to 0.018. And again, we said a mill is 1/1000th of $1. So to get the actual number of mills, when you see those on a tax statement, you take that 0.018 times 1,000, and that's how you come up with, in this county or this township's case, they are going to need 18 full mills to fund their budget to bring in this $18,321. How is the mill levy used to calculate the tax? And I'm going to give you an example on residential property here. So in your township, you have a $300,000 home that's been determined. That's the true and full value. Again, that assessed value is 50% or half of that. So that's 150,000. And since it's residential property, the taxable value is 4.5% of the true and full value. So that taxable value of this particular house is $13,500. The mill levy that this township has determined is needed for their township is 18 mills. So the way the taxes are calculated for this house, the township taxes for this house, how that 18 mills calculates out, it is the taxable value times the mill levy divided by 1,000. So in this houses, in the instance of this house, the taxable value is 13,500 times 18 mills divided by 1,000. This house will pay $243 in township property taxes. Remember, this is just one portion of the property tax bill. This is just for the township taxes. So of those dollars, that $38,000 that this township needs to fund their budget, this house will pay $243 of that. How does taxable value affect mill levies? And this is what I was talking about when we had those drastically increasing property values in McKenzie County during the boom years in the 2010 to 2020 time period. Here's an example. This budget again needs $37,382. There is $19,932 of revenue to support it. Totally, you need $18,321 to fund $321 to fund the budget. In the second set of chart at the bottom here, the taxable value is what's changed in the darker pink. We originally calculated 18 mills when there was a taxable value of $1,02,295. But if you have additional property or property increases or a pipeline that comes in, anything that increases your taxable value in this example in column 2, if it's increased to 1,200,000, that reduces your mills to 15 mills to bring in that same $18,321. And you run that, it's the same calculation you used to calculate 18 mills. You're going to take the 18,321 you need in property taxes, divided by the taxable valuation. It calculates out to 0.015 mills times 1,000 is 15 mills, is what you will charge each of your taxpayers against their value to on the property tax bill. Example 3 is if the valuation were to go up to $1.5 million, to get the same $18,321, your mill levy would drop to 12 mills. How do mill levies affect the taxes due on property? So on that same $300,000 house, if it takes 18 mills for this township to fund what they need to pay for in the next year, that will cost this home owner $243. If it only takes 15 mills, it costs this homeowner only $202. And if it only takes 12 mills, it costs this homeowner $162. And again, those mills, those 18, 15, 12 mills, adjust accordingly with the valuation, assuming that the township needs the same amount of dollars. Your mill levy, your mill rate should adjust accordingly and can increase or decrease based on what's happened with your taxable valuation. This is an example of that $300,000 residential property and what the total tax bill might look like. Again, understanding that what the township needs for taxes is just one portion of a property tax owner's bill statement. And in this case, and an example is they're also going to be paying 1 mill to the state medical center, 35 mills to the county general fund, 10 mills for county road and bridge, 4 for county extension, 1 mill for historical society, 3.5 mills for weed control, the 18 mills for the township, 90 mills for their school district, 5 mills for their fire district. So this house is actually going to be paying not just 18 mills for the township, but a total of 197.5 mills. And their total tax bill will be $2,667. The only portion of that bill that goes to the township is $243. And interestingly enough, when people are concerned about their property tax bill, this is just an example, but it's not typical. This is a typical example. The township or the county portion of the taxes in this case are 32% of the bill. The township taxes in this case are 11% of the bill. The school taxes are 54% of the bill, and the fire district taxes are 3% of the bill. The other thing that we've gotten that the legislature has asked to have included on the property tax statements is the effective tax rate. And just to give you a definition of that, in case you're not sure or not sure exactly what that is the tax divided by the true and full value. So in other words, in this case, this home, the total tax is $2,667. The true and full value of the house is $300,000. And so the effective tax rate on this house is, for this year, is 0.89%. And this is an example of the tax statement as they appear today. They're universally uniform across the state. Every county might have little tweaks, but they all contain these elements. And every tax statement has a 3-year comparison. It also needs they compare the legislative tax relief, your value over the last 3 years, the mill levy over the last 3 years, the amount of tax you paid over the last 3 years, and then again, that effective tax rate. So you can see in this particular properties, on this particular properties tax bill, their legislative tax relief, which is calculated largely it's related to the state taking over the funding of the vast majority, if not all, in some cases, of the social services budget. And that actually started happening 3 or 4 years ago. So that's a big portion of it. There's also some school tax relief in there as well. But again, moving down, then what else? The other things it compares, the tax statement compares, again, in the middle of the page, the total mill levy. Even though the valuation on this property has not changed in 3 years, the mill levy has fluctuated. You know, from in 2019, it was 232.9 total mills. In 20, it was 227.68, and in 2021, it was 236.59. And then you can see then the section below that, it shows the taxes by district in dollars. And so you can see the township in this case, and if it was outside of an organized township, but within a city, an organized city, that would show that they would use this line for that. But in this case, the township in 2019 collected $360. In 2020, dropped down to $311. And then again, you can see the mill levy had increased, even though the valuation didn't. It increased in 2021. And so in 2021, this property paid $346 of township taxes. Again, moving to the boldface line, the consolidated tax line, which is the total on this property, even though the valuation didn't change, their taxes changed slightly over that 3-year period from 2,288 in 2019, dropping slightly in 2020, and then up to 2,324 in 2021. And then the effective tax rate, what that shows again is that total amount of tax divided by their true and full value. So that went from 1.05 to 1.02%, and then in 2021, 1.06%. Talking now about levies available for townships, and I'm going to tell you that there are several levies available. Not all of the levies are being used by townships at this point, but just want you to be aware of what is available to townships. You're all aware of the general fund levy, which is 18 mills, can be up to 36 mills with the majority of the vote of your township electors. The county road system levy is a maximum of 5 mills if approved by the electors at an annual meeting, and it's for 5 years maximum. And that is, it would be a township's contribution to a county road within the township boundaries. So it's funding for and some improvements to a county road within your township. Generally, and can't say I know for sure it's always, but generally the county road system levy is initiated by a conversation by the county commission or by the county asking the township to assist with the funding. There are 5 mills allowed for judgments. We don't have any townships in the state using this right now. 10 mills if you have a liability policy in force. The special assessment on property tax property, we have 4 townships in the state using that right now. There is no max. We have 1 township using interest and principal payments. There is no max. We have 16 townships using the municipal or regional airport levy, and we have 19 townships using the airport levy. We don't have any townships using the fire protection levy. We don't have any townships using rural farm drains maintenance. We do have 2 townships that utilize the payment of debt to counties. And we don't have any townships at this point using the natural disaster or emergency levy. That was just expanded. That levy was expanded this last session, allowing for an unlimited amount of levy if it's approved by the voters. I believe it's for a 5-year period, but be aware of that. It's related to national disasters and emergencies. It's important that if you decide to use that levy, you properly notice it and vet it through your voters and make sure that they are very aware that there will be a vote happening on an increase of that levy. Responsibility of the township treasurer. Township treasurers are responsible for preparing the annual statement, and that's an actual form as well that is available on the North Dakota Township Officers Association website. You are to prepare that annual statement of receipts and disbursements, and it's not a complicated form, but it is required to be filled out. It is filed with the township clerk unless it's combined. The offices clerk and treasurer combined, and then if that's the case, it's filed with the chairman. And then regardless of which the clerk or the chairman is filed with, you also file a duplicate statement with the county auditor. This is what that form looks like. It's always prepared for the annual statement is for December 31st, the most recent preceding year. So the one that would be done this year in 2022 would be for the year ending December 31st, 2021. The form on pages 2 and 3 calculate the revenue for your township, and it breaks it into different categories. On page 2, it's general property taxes, township road mileage, state aid, and coal development. Page 3 is telecommunications, interest, dividends, and all other receipts. Pages 4 through 7 and the various columns are where you were going to report your expenses, and they are broken down based on board salaries, township association dues and meals, election board, legal notices, and they're, the examples there at the bottom of this slide. The last page, or page 8, is your summary document, and that is going to show section 1 of the summary document is going to be the beginning balances and the income. Section 2 will be disbursements and your ending balance. And section 3 will report any outstanding debt. And again, this statement, your annual report, is filed with the clerk or chairman, depending on if those positions are combined, and then a duplicate with your county auditor. Lastly, I wanted to talk to you, reiterate the different forms, the 2 different types of forms that are required on an annual basis. And first is the annual township budget and certificate of levy, including schedules A and B that we went over. Secondly is your annual statement of the township treasurer. And lastly, I wanted to let you know that for those that are looking for an electronic version or way to do your township accounting, there is software that is being used by several townships in the state of North Dakota. It's called the Annual Township Ledger Report, or ATLR. It's software that runs with Microsoft Excel for Windows, and it's available either through your county auditor or through the North Dakota Township Officers Association. There is a township supervisor, I believe, that from Lemoore County, Tim Geinert, that has provided some support. I do not have his contact information, but some of you may know him. But if you're looking or interested in this software, reach out to your county auditor. They may have it. That was kind of the original plan, is that the counties would have the software and make it available to the townships. If not, contact Larry at the Township Officers Association and see if he can connect you with the software vendor. With that, I know there might be some questions. I've got my contact information at the bottom of this slide. Feel free to reach out to me anytime you can. I am full-time employed with the Association of Counties, so I will make myself available when and if I can, anytime. And I appreciate your attention, and I appreciate the opportunity, Larry, to present this information. Thank you.